Alright, good afternoon and welcome to Chartered Mind Academy tutorial. And please, if you want more of my video regarding financial reporting and corporate reporting, kindly subscribe to my YouTube channel so that you can continue to have updates on anything relating to corporate reporting and financial reporting. Thank you very much. Alright, let us look at this question under IFRS 16. Then we can analyze it and then suggest a solution to it. Alright, so the company name is Doma PLC. On 1st January 2020, Doma PLC entered into a 6-year lease manufacturing plant with annual lease payment of 5.5 million starting from 31st December 2020. The lease agreement specified that the lease payment, except yearly base payment of 1 million included in the 5.5 million, will increase every 2 years on the basis of increase in the consumer price index for the preceding 24 months. The CPI at the commencement date was 125. Additionally, Adoma is required to pay 500,000 every year once cost saving in that year is at least 6 million. Adoma cost saving achieved with 8 other assets had been averaging 5.1 million prior to 1st January 2020. The initial direct non-reimbursable cost incurred by Adoma was 350,000. The rate implicit in the lease, which would have been 12% per annum, was not readily determinable by Adoma. Adoma's incremental borrowing rate was 14% per annum. At 31st December 2021, the CPI was revised to 138. The actual cost savings achieved by Adoma in the years ended 31st December 2020 and 31st December 2021 were 5.3 million and 6.8 million respectively. Cumulative discounted factors based on 12% and 14% are provided below. Required in accordance with IFRS 16. Leases explain how the above lease will affect Adoma financial statement for the year ended 31st December 2021. Alright, so this is the question that they expect us to solve. All right, let us go on to the sheet and then break it down. Company name is Adoma PLC. Okay, so the lease contract was when? So let's see. The lease contract was 1st January 2020. Lease contract was 1st January 2020. Lease contract. All right, so annual lease payment. And the question, what is the annual lease payment? That's why the annual lease payment is 5.1. So 5,500. Let me hang 3 zeros. So lease term was 6 years. It is in there. Let's confirm. So lease term is what? 6 million. Right. We have borrowing cost for Adoma is how much? So what you should take note of is that at a point they will come out, they will bring you to discounts or borrowing or implicit rates. So you should be very careful. They will dance around it. But under IFRS 16, we settle on what? On the borrowing cost of what? Of the company in question, or the company that is what? That is taking the lease. So the borrowing cost is how much? 14%. So I think this is basically what we are looking for. Now, when you look at the question, they also said that the company, the lease agreement said that the lease payment, except baseline payment of 5 million included in a 5.5 will increase every 2 years on the basis of increase in what? In consumer price index for the preceding 24 months. So this, what can you say? What do you see here? What they want to tell you is that after every 2 years, the company will the lease payment will be adjusted. That's why they will increase every 2 years right? Lease payment, except 1 million baseline, will increase every 2. So every 2 years, the lease payment will increase. All right. So if so, all right. So when did they say the company will adjust its lease payment? Because the contract was what was on 1st January 2020. So in 2 years later, 2 years after, it will what? It will be 31st December 2021. That's 2 years. All right. So here, the next years we want to apply this is what? S1. So here we move to 2 years later. This is what is going to happen. So we will have what? 31st December is when they will modify this agreement. So here we will have what we call modification. Modification of what? Lease contract. All right. So how do we? So what are the elements that will modify this lease contract? One, they said that they will modify the lease contract based on what? Consumer price index, CPI. Our consumer price index is what is determined by statistics service, which gives the overall purchasing power of individual in the country. When you look at this question, they want to use the purchasing power to what? To vary the lease payment agreement. So they're giving us every 2 years, they will use that one to determine that. Right. So this is modification of what? Of lease agreement. Okay, so now that we understood the price consumer index at the beginning, that is first the date that they went into agreement, 2020, the CPI was how much? Let's check in the question. The CPI was 125. The CPI is what? 125. 125. And after 2 years, let's check. They were giving us after 2 years, which is 31st December 2021, the CPI was revised to 138. Well, that is what the company told us that to happen. So on 31st December 2021, so the CPI is what is revised. So the CPI revised is now what? CPI revised is now what? 138. Okay, so let's continue again. So this is a modification that they want to now. And the modification to that's what they also said. They said also the amendment, how to amend the lease payment. So they said that the lease payment, so the initial lease payment is how much? Is 5,500. Now, this lease payment consists of what? So this lease payment, it consists of what? Or let me say initial lease payments. Let me put this way. So initial lease payment consists a lease payment of how much? 4,500. And then B, baseline lease payment of how much? That's what? That's 1 million. It's 1,000. Now, when you read the question, so when you add the two, it will give you what? 5,500. So the total lease payment will also be 5,500. So here in the question, that's what they said that. Have you seen these two lease payments? When you read the question, that's what they said. Read it. When you read it, they said that the lease payment specify that the lease payment, except yearly baseline payment of 1 million included in 5.5 million, will increase every 2 years on the basis of increase in the consumer price index. What they mean here is that the lease payment here, this one, is what? Is flexible. It means we can what? We can change that lease payment. And have you seen this one? The baseline is what? Is fixed. That is what they said. That except 1 million, the lease payment is subject to change. That is the whole idea that they want to what? They want to portray here. So you take note of that. So now that we are done with what modification with regards to lease payment issue. Let's continue our conversation. Now, during the period, what did they say? They also talked about cost savings. They also talk about additional lease payment for everyone. So that additional lease payment, the arrangement was, so let me say, this is one, this is two, and now three. So the three also falls under what we call variable lease payment. Now, on a variable lease payment, what do you mean? Variable lease payment is based on what? Performance. It's based on performance that determine what you should pay. And variable lease payments usually are what? Variable lease payments usually are what? They are expense through what? Through profit and loss account. All right. So what this means is that in a question they will give you a condition. So example, if maybe you have you've leased an asset, AT Limited leased a machine to Y Limited for 5 years. If the machine is able to produce, if the machine is able to produce produce above 5,000, every 5,000, every additional production shall attract few series. So the same year, 1st January 2023, production 5,000, 2024 production 5,200, production 5,500. All right, so this is typical what? Variable lease payment. So in this instance, all that they want to tell you is that they are giving you the threshold, right? So here the threshold is what? Threshold of what? 5,000 and below attracts what? No further payment on your lease. But if they produce more than 5,000, so here you see that 1st January 2023, they produce production or how much? 5,000. So here there is no what? There is no additional. So that's what there is zero. So this 0 times, they said that any additional payment that they will do on 5,000 will attract how much? 2 series per unit or product. Then when you come to the following year, 2024, there was what? There's a production, and the production was what? Was 5,200. So clearly you see that there's additional production of what? Of 200 on what? On this. So which is what? 200 multiplied by 2 6. And then 2025, you have what? Additional production. And the production was what? 5,500. So here there's what? Additional what? 500. They multiply by 2 series. This is what we call variable lease payment. So here, here is 0. Here is what? 400. And then here is what? 1,000. So when you are done, when you sum them up, or when you are done, you realize that in your what? In your P&L extract, it will bring these at this. So this one serves as what? Additional lease payment. So you have what? 2023, 2024, 2025. All right. So here we call this what? Additional lease payment. Now, additional lease payment, year 1 is what? Nothing. Year 2 is what? 400, and year 3 is what? 1,000. All right. So this is what we call variable lease payment. All right. So when you look at this question, they've given us similar of that sort. So they told us what? They'll pay additional, or required to pay 500,000 once there's what? There is cost saving, which is at least 600. So they've given you what? Threshold. So when you look at this one, this is what variable lease payment. So here they've given the arrangement on 1st January 2020. What did they give? They gave what? They said that the threshold of what? Of 6 million. Make it 6,000. Hanging what? 30. They gave 6 million. So the 6 million, if they are able to what? Produce, if they're able to cost saving. So this is what? Cost what? Saving. If the machine is able to, help them to what? Save cost, which is what? Equal to 6 million or more, they will pay additional what? Lease payment. So the additional lease they will pay is how much? So they will pay 500,000. That is the whole point they want to lay here. So when you come here, let's look at it. They've already given it to us. So they said that the cost saving, so average, so 2021. So when you come here, the cost saving 2021. So when you come here, 2021, 2022. Oh, sorry, 2020 here. Oh, sorry, so 2020, 2021, and 2022. Okay, so that was the cost saving. So the cost saving 2021 is how much? Okay, they're giving us a 5.1, 5.1, which is what? 5,100, right? Upon 3 zeros. Then when you come to 2020, all right, so when you come to the down last paragraph, it's in December, there's a cost savings of for 2020, and the year ended 2020 and 31st December 2021 were 5.3 and 6.8 respectively. Okay, so when you look at this, the 5.1 is what? Is the date when they were signing the contract. So cost saving at the initial stage. So let's put it this way. So cost savings at 1st January 2020. When they were signing the contract, it was what? 5,100. Okay. Now at the end, 31st December 2020, 31st December 2021. All right. What are the cost savings? Cost savings 2020 is what? I'm at 5.3 and 6.8 respectively. So here is what? 5.3, so 5,300, and this one is 6,800. All right, so this is what they want you to work on. So here, between the two, which one is more than the threshold? The threshold is 6 million. So if they're able to cost save more than 6 million, equivalent to 6 million or more, they are liable to pay 500,000 as what additional lease. That is what the question is. So here, the company will pay what? Will pay 500,000. In which year? They will pay it what? In year what? 2021, because the cost saving 21 is more than what? It's more than 6,000 or 6 million. So the cost saving is what? They are liable in what? 31st December 2021, and they are going to pay 500,000. That's all. So this is what we call variable lease payment. All right. So that is a summary of the question as given. That's a summary of the question. All that you see, that is a summary of the question. All right. So in the question, I've seen that there is also what we call indirect cost. And there's additional cost. And it is there. And we'll read below initial direct cost. Initial direct cost care about is 350,000. So we want to put it correctly. Direct cost. So much? 350. Okay. So that is all about this question. Let us get down to how to solve it. This question falls under what we call modification of lease. It falls under modification of lease. We have so many arrangements of what? Lease. Okay. All right. Let's go into the solution. In preparing lease, there are steps. The step one, you find out what your lease liability. Now, lease, like we start forth with annual lease payment. How much are we paying annually on our lease liability? We are paying 5,500. Good. And this 5,500 is going to be paid for how many years? 6 years. However, because the payment is what is in the future, it must be discounted to the present value. In accounting, whenever there's expected cash inflow and cash outflow payment, we discount it to the present value because of time value of money. They use annuity factor to help us determine the present value of the of 5,500 that we will be paying for the 6 years period. And because the money is is regular, or is the same amount we'll pay over the period, we use annuity factor to determine that. If it is not regular, or the money is keep on changing every year, we cannot use annuity factor. That we will use single we will use the single or DCF to that. So that one we will use we'll do it one by one. So you have your year, your cash flow, you have your DCF, then your present value. Then that one you will do it one after the other, right? So you list the number of years, then you list the cash flow, then you every year you do you will find the DCF using the formula of 1 plus R to the power of -1, so that you can get the discount factor for the period. And we want to then you multiply cash flow by the discount factor, then you get your individual person, whether you sum them up. But in this instance, the money is regular, so we can use annuity factor. All right. Now the annuity factor, we have 1 minus into bracket 1 plus the rate, all divided by the rate to the power of -1. So in this instance, we have 1 plus the so 1 minus the bracket 1 plus the rate. The rate, how much is the interest rate or borrowing costs given in the question? So let's check. The borrowing cost is 14%. So you'll have 0.14 to the power. The term is 6 years. So you divide everything by 0.14. Alright, so this gives me 3.89. So when I multiply, what do I get? That gives me 2,1,395. Okay, so this is my present value. Alright, so the next step is find your right of use of assets. Now your right of use of asset is is your lease liability, present value 1,395, plus any other additional cost incurred by the leasee. So in this, did the leasee incur any additional cost? Yes, there's direct cost the leasee incurred. Let's check. When you look into the question as summarized, there is additional direct cost for 350. Or better still, you can refer it to the question. They say the initial direct non-reimbursable cost incurred by Adoma was 350. You add it. What do I have? That is 2,1,745. Now the next step is to find your depreciation. Now how do we find our depreciation? So you bring your right of use of assets, which is how much? Which is 2,1,745. Then you depreciate it. So year 2020, you calculate your depreciation. What do you have? You have 21,745 divided by the useful life, or the number of years, or the term of the agreement is 6 years. So what do we have? So year 1 depreciation is 21,745 divided by 6. That gives me 3,624. Okay, so current amount is 18,121. So this current amount at the year end 2020, 2020. Then you will calculate what depreciation for 2021. You have your carrying amount. All right, of use of asset, which is what 1812. 1812 less what your depreciation, which is how much? 18121 over what? Over 5 years. That gives you the same answer as what? 3624. So that gives you how much? The current amount here we what? 14497. Okay. I'm not going to proceed with the depreciation calculation. Why? When you are dealing with lease and there's modification, take note of it. When there's a modification, check when is the modification taking place. If the modification is taking place after 1 year, depreciate the asset to how many years? 1 year. If the modification is 2 years, depreciate the asset to how many years? 2 years. If the modification is 3 years, depreciate it to what? To 3 years, because we will do what we call adjustment to the what? To the balance. So when you look at this very question, you will realize that there is a modification to be done after 2 years. So modification is what? 31st December 2021. Meanwhile, the agreement started when? On 1st January 2020. And they said that they will do modification on what? 31st December 2021. So year 1, 1 year for 2020, 2 years to the end of 2021. So that's 2 years. So after 2 years, we will do modification. If so, then you need to depreciate your assets for only 2 years, so that we can have space to do our adjustment. All right. Now that we've cleared this one from the road, then let's move to the next item. We move to the fourth item is you develop your amortization table or your schedule. All right, and you line it. Now that we cleared that one from it, you should ask yourself, when is the payment? Because remember, we have advance payment of lease and we have what? Arrears payment of lease. Now, when you look at this question, they said that the payment is what? Check it. They said the payment is what? Is in arrears. So when we read, they say the annual lease payment of 5.5 million starting from 31st December 2020. You see, not all the question will be explicit. Not all the question will be explicit. They can tell you that, okay, the payment is in arrears. If they don't tell you the payment is they will tell you when the payment will be done. So if so, know when contract began when. Contract began when? 1st January 2020. And they said the payment will be when? When you read it, you say what? 31st December 2020. So this is what? Arrears payment. If so, then you start with us. Then so that will help you to what? Develop your amortization table. Now, I have in my previous video, I have tutored the advance and arrears lease payments, how the amortization table is developed. So you can go and watch if you've not seen it. Okay, so you have it here. You have your years, you have your balance brought down. If you are paying in arrears, your interest will come first, which is what? 14% before your lease payment, right? So then we will crown it here, balance carry down here. Okay. In the question, they said we should do how many years? They said we should account for the lease payment 2020 and 20. We should account for lease payment 2020 and 2021. So you have 2020, 2021. And remember, because you are doing arrears at all times, when the question says you should do arrears, add another year to the requirement. So meanwhile, they say you should do 2020 and 2021, add 2022 to it, because of the figures you will derive for the purpose of your statement of financial position. All right, so after that, then you start. What is your lease liability? What you'll be paying for you'll be paying. You will start from what? So your lease liability is 21,39,5 to 21,39.5. Okay. Then you charge what? Interest on it. So the interest is what? The interest is what? 299.53. How much are we paying for this lease? It's what? 5,500. All right. So what is our balance? So you have 39. All right. So I think the opening balance I didn't put it well. So we have two. There's no point. So it's 21,395. Okay. So you have it here. 21,395 plus 299.53 and 5. All right, so let me correct few things here. So you have 29.3. All right, plus 21,939. All right, so the balance will be 18. All right, so your closing balance here becomes your opening here. So you have what? 1890.3. That we charge interest. So the interest here is what? 2644.6. Good. So what do we have here? So here is what? 1603.4.9. Okay. So now that we've gotten to this point, remember the question says that after 2 years we will do what? After 2 years there will be a modification of what? Of this lease payment. So when you are done, remember the modification is done on what? At the accounting year ended. So when the agreement was reached, so you should understand how to craft the amortization table depending on when the modification was done. So if you're not privy to my tutorial with regards to modification, when agreement was done at the end of the accounting year, or when the agreement was done at the beginning of the accounting year, depending on when the payment is what is done. So check here. So if agreement is reached on 1st January, example 2020, but lease payment is done on 31st December 2020, then there is a way of what? Arriving at our balances on the payment schedule. And this is also different from agreement to modernize is rich on what? Is rich, and it will be the agreement or the modification will be what? So here, so when you look at this one, the modification will what? When is the modification? So they reach agreement on 1st January 2020, but the modification will be done on what? On 31st December 2021. But it is the case if the agreement is reached that the modification will be done on 31st December 2020. We know this one beforehand is what? Is reached on 31st December and modification on 31st December 2020. You see this, we have what? They have different method of what? Determining how to what? Account for on the payment schedule or the amortization schedule. So when you look at this question, it is on what? On the second one. The agreement is already known that it will be effected at the end of the accounting year. So the amortization will look different if the agreement is what? Is reached on 1st, the modification will be done at the end of accounting year. So that one too is what? Is also different from the second one. All right, so if you want to know the first one, follow my tutorial under sublease accounting, so you'll see how I went about the top one. So let us concentrate on our second one. Now, second one, or the 0.5, they say what? Modification. Okay, so the modification, how are we going to do the modification? They've already given it to us like that. We should modify the what? We should modify the lease payment preceding what? 24 months. After 24 months, we have to what? We have to modify the lease payment. Now, if you are modifying the lease payment, what is the what? Lease, initial lease payment is how much? It's what? 5,500. That's the initial lease payment. But so this 5,500 is what they want us to modify or amend or revise. Now, in the question, they said that there's a baseline payment, which is how much? 1,000 or 1,000,000. But they said this baseline is what? Is exempted from modification. So if it is exempt from modification, then we have to less it. So you get what? 4,500. When you follow me, that's what I said, that I explained it here. That there's what? One is flexible and one is fixed. I've already explained it here. Okay. So here, this is what we are going to be modified. 4,500 is what we are going to modify. So if you are coming to do that, we are coming to modify. What did they tell us what to do? What did they tell us? They said that we should modify it using what? Consumer price index. And the consumer price index at the end is the formula is this, is what? The consumer price index is what? Is the end of what? The old or the new CPI over what? Over the old CPI. So in this one, you realize that the new CPI is what? 138 over the old CPI, which is what? 125. All of them are in the question. All of them are in the question. Okay, that's what you have it here. The CPI at the beginning and at the end. All right, so when you divide it, what do we have? So you will have what? 1.104. Okay, so this is the what? The CPI. So when you get the CPI, then you multiply the CPI by what? By the lease of 4,500. So that gives me what? 4,968. So this becomes our what? Our new lease payment. As at when? The date is what? 31st December 2021. Okay, now that we know our new lease liability, what next? And we add back the what? The baseline payment, which is what? 1,000. Add back, what do we have? We have what? 5,968. So we will add what? The 5,9. We have what? 5,968. So that gives us our new lease payment. So now that we know our new lease payment, the next step is to find our lease liability. Because when your new lease payment changes, then your total lease liability will also change. Then you have to come and then, work on it to get your new lease liability. So here you start for your annual lease payment. So which is what? 5,968. Then we'll find out our annuity factor, where we know our formula to be what? 1 minus into bracket 1 plus r to the power of what? Negative n. So in this instance, we already know our 1 into bracket 1 plus r. The r is 14%. It didn't change. Our interest rate did not change. To the power of what? What is the year left for us? Initially, our term is what? 6 years. And we've already done or paid 2 years, 2020 and 2021. 2 years. So how many years left? We have 4 years term left. So here will be 4. So when we multiply, what do you have? You will have 2.91. So when you multiply, what do you have? So that gives me 17,367. Or I can keep it like 17 point. Decimal place, how many? 2 decimal places. Let me leave it 2 decimal places. Okay, so this is how your present value now. All right. So now you know your present value. Now watch here. You are coming to do what? You are coming to find your what? Your what do you call it? Your salary. You say what? find what your remeasurement. Okay, your remeasure. How do you find your remeasurement? You find your remeasurement for what you have your new lease liability present, which is how much 17,366.8. Then you less your balance carried down of your amortization schedule. Come here, which was 2021 close. So let's go there. Go to your schedule. You will realize that your amortization schedule balance was 16034.9. So that's 16034.9. Let's see what do you have. The answer is what 1331.98. So this is what we call the adjustment. Adjustment to right of use of asset. So this money will be adjusted, or value will be adjusted to right of use of asset. So you go up there, go to right of use of this right of use of assets. I will say now the balance carried down at the end of 2021. Then what you adjust the remeasurements. As I was earlier say, what you'll adjust remeasurement of how much 1331.98. So when you add, what do you have? That's 144. That gives me 15828.98. Before then I can charge what? Depreciation. So depreciation is what? 15828.98. All divided by, now the year is what? 4. All right, so the depreciation will be how much? 1125.75. All right, so this one we have 15828.98. So that gives you how much? All right, so that gives me how much? 15128.6. Okay, so that becomes what your carrying amount. Carrying amount in what? That's at what? 2022. Okay, so we are done with what? With the adjustment. So this is what we have now. So we are done with remeasurement, everything. Okay, so you come to the what? You come to the table. So when you come to the table, you realize that you have what they call the remeasurement. You have what your remeasurement. So we have our remeasurement, and then you can have our new balance CD on the table. Okay, all right. So how does it look like? So you have what your revised balance sheet. We call it revised balance sheet. Now, when you look at the year one, we didn't do any adjustments, so you have the same balance CD, which is how much? 1889.0.3. Good. Year two, we did what? Adjustments. Remember, at the end of year two, we did adjustments, and the adjustment is how much? Let's check. The adjustment that we did, our new lease liability that we did is how much? Our new lease liability is how much? 17,366. So that's 17,366.88. Good. So that's the difference that gives us what remeasurement value of how much? What is a 1331.98. So the difference of 1331.98. That's the difference between the balance carried down at the close up and then the adjustment made at that very 2022. So when you are done, the closing balance actually is 17,366.88. Then you'll bring it here as your opening balance. 366.88. Then you charge your interest. Okay, so you have 2431.36. the lease liability. How much is now our lease liability? Let's check. Our new lease liability is this. Our new lease liability is what? Is this? 5968. 5968. We'll have what? 13,830.24 dash. So you come here 13,830.24. Okay, 0.24. All right, so we are done with our table and everything. So now we can now go and then what? Construct our extract. So you have your first extract that you construct, which is what? P&L extract. About your profit and loss extract. Okay. So they said we should do 2020, 2021. So here you start with your interest that you'll be paying every year to the lessor. Go to the table. Go to the table. Year 1, the interest was 2995.3. 2995.3. Year 2, 2644.6. 2644.6. 3. You do your what? Do you have any additional lease to pay? Yeah, there's what? Additional what? Lease to pay. That is variable lease payment. Come here. I had already shown you that. Where is it? Variable lease payment. Variable lease payment. Here. You have it here. So variable lease payment, if you remember, I explained this one why you have to pay, because they've exceeded the threshold, so they will pay this money to you. They will pay it as additional, but they give them condition that when the cost saving is what more than 6 million, they will pay additional 500,000 as additional lease. Now, when you look at it, at the beginning, the cost saving was 5.1. At the end, it was 5.3. It didn't meet the threshold of 6 million. Now, 2021, the cost saving is 6.8. It means it has It has exceeded the threshold of 6 million. So they have to pay additional lease to the lessor. And this is what we call variable lease payment. And variable lease payments are they are expense through the P&L. Okay, so we pay additional lease. So here it is it happened in 2021. So we pay 500. Yeah. So when we are done, then we calculate our depreciation. All right. So all of them will be in brackets. All right. Okay. So at depreciation year 1, what is the depreciation? The depreciation for year 1 and 2, 3624. 3624. Okay. So we are done with P&L. Then you go to statement of financial position extra. Okay, so that one too is 2 years for 2020, 2021. All right, so with this, you will have your right of use of asset. Now, right of use of asset, you will pick the balances from your depreciation shadow. So year 1, 1812, 1. Year 2, 1449. Okay, so we are done. So we come to our liabilities. So we have non-current, and then you have your obligation as your lease obligation. Then current, you have your lease obligation. Now let us start with with the long-term lease obligation. So you go to the table. So now these are your balances, right? These are your balances. If these are your balances, which are the balances that will come to the statement of financial position and the long-term liability, right? And the long-term liability, which ones are going to be the your balances to be taken. So at all time, when we are doing arrears, example, if you have what liability to pay, this liability, assuming it is what, this is 400. This liability contains what? It contains what? Your parents and what, and non-parent for the period, which means that this liability will be divided, assuming it is amortized. So if, assuming every year you pay 100 from the 400, the 100 that you pay is what? Is your current liability, 100. Now, your non-current liability is what? Is the 400 that you what you pay, and you put it on the surface of what, of your P&L minus what? The 100. So the 300 becomes your what? Your non-current liability. This is what we call the splitting. Split the what? The liability. So when you look at it, the first year, your end of 2020 liability is 1889. Now, this 1889 we need to split it between long term and then short term. So how do you split it? Is the what? Is the difference between the what? The first year and the second year. That will give you the what? The split of current and non-current. So when you split it, when you less it, the difference will give you the current liability. And then the second year liability will be your long-term liability, because when you add the two, it should give you the first portion of first year liability. So that's what we call the splitting of what, of liability. So how do we do that? Now we have so many ways of what, determining what long-term and then short-term liability. Now let me also give you another option here. Whenever there is a modification, listen very carefully. Whenever there is a modification, the balance that you have already before you calculated your new balance sheet is your long-term liability. Take note of that. Before the modification, you already have balance carried down certain year. So that becomes your long-term liability, which is what? 160.34.9. So that is how much? 160.34.9. This becomes what? Your long-term liability. It was there before you what? Before the modification of what? Of the liability. So this becomes what? Your liability. Good. And then the next one, 13,830, is what? Is your next long-term liability, which is 13,830. Okay. Point what? 0.24. Okay. Okay, so now that we are done with what, with the liability, long-term liability, let's come to current lease obligation. Okay, with regards to current lease obligation, we have so many types, or we have options that you can adopt. So let me take like maybe option 1. You can have it this way. You will pick the year 2. Watch here. You will pick, because when you look at the long-term liability, you see we started picking the what, the year 2 going, right? With the option 1, you can pick what, option 1, you will pick what, year 2, which is what, 2021. You will pick the lease payments, which is what, 5,500. Then you will less the what, the interest expense of 14% interest, which is how much? Let's check. The interest is how much? 2644.6. 2644.6. Less is what the, I guess in what, 2855.4. All right, then you do same for 2022. So you pick what, the lease payment for 2022 is what? Let's check. 2022, the lease payment is how much? 5968. All right, 5968. Then the interest, sorry, and the interest, how much is the interest? The interest is how much? How much interest are they paying? 2431.36. 2431.36. How do you have? 968. Okay, so this gives me 36.6. Okay, so this is option 1. And you can pick what? Option 2. all you need to do is that you will just pick 2020 balance CD, which is how much? 18,890.3. Then you will less what? Balance CD, what? For 2021, which is how much? 16034.94. What do we have? Alright, so that will give me what? 2855.4. You repeat same here, and you pick what? 2021 balance CD, which is how much? The 2021 balance CD. Let's check. 2021 balance CD. 2021 balance CD is this one. Not this. Is this one. So you pick that one. That's 17,366.88. Then you less what? 2022 balance CD, which is what? 13,830.24. Okay, how do you have? So that also gives me 3536.4. Okay, so that is it. So these are the balances, current balances or current obligations. So here will give me what? 36.6. Then the first one is for 28,555.4. Okay, so yeah, so that is it. You realize that all of them are the same. This one and this one are the same. You can see that this one and this one are the same. This one and this one, they are all the same. All right, so that is it about this very question. Thank you.